So, what technology company could make you money? Comment down below if you can guess the stock by the thumbnail. So, the company that could make you money is Apple. So, if you guessed Apple, good job, you were right. Do you guys use any Apple products or do you own Apple stock? If so, comment down below. Make sure to sign up with my Webull link in the description below and get yourself some free stock. Anyways, so Apple's current market cap is $2.85 trillion. Their 52-week high is $199 with 62 cents. Their 52-week low is $143 with 14 cents. Their earnings per share is $6 with 43 cents. A way you can tell if a company is profitable is by looking at their earnings per share. They pay a quarterly dividend of 24 cents or a dividend yield of 0.52%. Now, looking at their annual revenue, in 2019 they made $260.17 billion. In 2020 they made $274.52 billion. In 2021 they made $365.82 billion. In 2022 they made $394.33 billion. In 2023, they made $383.28 billion. And just in case you don't know what revenue means, revenue is the total amount of money a business earns from a variety of sources. Now, looking at their annual net income, in 2019, they made $55.26 billion. In 2020, they made $57.41 billion. In 2021, they made $94.68 billion. In 2022, they made $99.8 billion. In 2023, they made $97 billion. Just in case you don't know what net income is, it's what a business or individual makes after taxes, deductions, and other expenses are taken out. According to 42 analysts, 40% of them are saying to buy Apple. Now, what price target do analysts see Apple at? For the 1-year price forecast, the average price target is $201 with 41 cents, with a high estimate of $250 and a low estimate of $158. Now, looking at Apple on the technical analysis perspective, the current support level on the daily chart is 180. The current resistance level on the daily chart is 196. Support and resistance levels are important because they help when to enter in a trade and when to exit out of a trade. That's why it's important to have a game plan using support and resistance. Try to be realistic where your support and resistance levels are at, so try not to overextend your support and resistance levels. What makes this a convincing buy is that there is an inverse head and shoulders pattern forming on the daily chart. You can see that Apple is starting to form that second shoulder, which could mean a reversal to the upside possibly next week. Just in case you don't know what an inverse head and shoulders pattern is, a inverse head and shoulders is a chart pattern seen when a security's price falls and rises 3 times to form 3 successive troughs, the second of which is the deepest. Basically, the formation of the inverse head and shoulders pattern is seen as an opportunity to enter a bullish position. If you look at the previous days of Apple on the daily chart, you can see that there's a triple bottom pattern. You can see that when the third bottom formed, Apple started going up slightly. So what is a triple bottom pattern? A triple bottom is a bullish chart pattern used in technical analysis that's characterized by 3 equal lows followed by a breakout above the resistance level. Basically, the formation of the triple bottom pattern is seen as an opportunity to enter a bullish position. On the weekly chart, you can see a double bottom pattern forming. With the second bottom forming, it looks like Apple could actually reverse to the upside. So what is a double bottom pattern? A double bottom pattern is a technical analysis charting pattern that describes a change in trend and a momentum reversal from prior leading price action. Sometimes it's best to look over a stock and see how it's done in the past, because sometimes history can repeat itself. Now, what could happen tomorrow or in the upcoming days is that Apple could start a reversal to the uptrend, and just maybe it could touch that resistance level of 196 again. and possibly break through it. If this does happen, then we could see a further uptrend of Apple. Now looking at this with the moving average indicators, on the daily chart, you can see that Apple tried breaking the 9-day moving average, but got rejected. So what is the 9-day moving average? A buy signal is generated when the price moves above the 9-day moving average. A signal is triggered when the price moves below the 9-day moving average. Let me show you an example of Apple getting rejected by the 9-day moving average. If you look at the past days of Apple, you can see that it touched the 9-day moving average, which triggered a downtrend. Apple is currently in a healthy state. It's over the 200-day moving average. So looking at this over the long term, the signals in Apple over the long term could go up even further, as investors have more confidence in the stock and consider buying. So what is the 200-day moving average? Basically, if a stock is below the 200-day moving average, it signals a downtrend. Meanwhile, a stock above the 200-day moving average means a signal to the uptrend. Now, the moment everyone's been waiting for, how can Apple make me money? It's by buying options. So what are options? To explain it in the most simplest way, basically if you buy a call option, you're betting that stock is going to go up. Meanwhile, if you buy a put option, you're betting that stock will go down. So for me, when I'm buying options, I do not like buying options short term. I like buying options long term because they're way less risky and don't risk losing that much money if I'm wrong. Meanwhile, if I play a short term option, I'm more likely to lose money because each day that passes, that option decreases in value. Meaning the long term option decreases in value too, but at a slower pace. Just like stocks, do everything with risk management. So have a game plan planned out, plan where you want to enter, and exit out of a trade. So the stock option I'm considering is May 17th call option strike price of $185. Moving forward, what would happen if you invested $1,000 into an Apple call option? Let's take a look. So let's say you bought a long-term option that expires May 17, 2024, and let's say in the next month it touches that resistance level of 196 in March 16th. That call option would make you a gain of $636. Now you might be all excited and hope it goes up even further. Don't do that because the next thing you know, that option could be worthless the next day. So as always, have your game plan and go according to that game plan. Now my game plan is to possibly sell it at 190, but only if I see that Apple isn't making any progress to 196 in the middle of March. If I sell at 190, I'll make $201, which might not be as much as $636, but at least I knew, okay, Apple is struggling a bit, and I know if I wait till April, my option is going to decrease more in value, and it's not going to be worth $201 anymore. Now let's say you're like, whoa, options seem very risky. Well, yes they are, and if you're just starting out, you should learn to paper trade with a realistic amount of $1,000 and learn from your mistakes. If you sign up with my Webull link in the description below, Webull will let you paper trade with fake money, and from there you can start your investing journey. Don't feel stuck because there's always a long-term option where you can invest in an Apple for the long term. Now, moving forward, what would happen if you invested $1,000 into Apple for the long term? Let's take a look. Now, let's say you invested in Apple for 10 years with $1,000. Then let's say you contribute $500 into Apple monthly, reinvest your dividends back into Apple as well. By the end of the 10-year mark, your investment of $1,000 would now be worth $718,411. That is just insane because all you did was hold on to Apple for 10 years, reinvested your dividends back into Apple, and let Apple do all the hard work for you. Now, if you had invested into SPY for 10 years with a small investment of $1,000, then let's say you contribute a monthly amount of $500 and reinvest your dividends to buy more SPY shares. By the end of the 10-year mark, your investment would be worth $256,357. That is just insane because all you did was hold on to a SPY for 10 years, Reinvest your dividends back into SPY and let SPY do all the hard work for you. This is the power of long-term investing. Meanwhile, if you had invested that money in a savings account, it would be nowhere what Apple or SPY could have given you over the 10-year mark. But what does everyone think about Apple? Do you see them having a good future, or do you think they will struggle? Let me know in the comments down below. This concludes the video. Hopefully you guys enjoyed it. Get yourself some free stock when you sign up with my Webull link in the description below. As always guys, take care, and I'll see you in the next video. And as always, this is not financial advice. Alright guys, see ya, take care, bye.